All right. Good morning, traders. Are we live? Are we up and running? I'm not seeing the stream, so there we go. All right. So today is Friday, February 19th. My name is Charles, and this is the Pirate Traders live stream. Okay, so as we assumed yesterday from yesterday's market, this was a big enough sort of reversal of momentum to get us, out of this downtrend. The way we figured that out was that all day value was lower. And then at the very end of the day, we pushed higher and spent enough time up at higher prices that we were able to make value area overlap the previous day's value area. Okay? So that's the first thing you need to see in order for the market to rotate back up. So that was good. We've got that. Overnight market opened up here. It came down. It repaired the weak reference that we left from that pullback low yesterday. Okay. We don't count that as an official repair because overnight traders are weak hands. So nothing that they do counts really in terms of regular trading hours. So that weak reference remains, but it's only one. So it could be left behind. No big deal. We're going to open with a gap higher today. This was our closing price yesterday. This was the high of the day. So we are going to have a gap higher. Gap rules will be in play this morning. What are gap rules? Gap rules basically say that the... sorry, let me just get this straightened out here. So let me just step back for a second. Overnight activity is balanced. It's about 50% above the open and about 50% closed. So that means that you don't necessarily need to worry as much about a counter auction, right? And counter auction would be going short because the market was pushed higher. Okay, so that's the first thing. So then we talk about the gap. So there's going to be a gap higher. The gap fill would be from wherever we open down to the high of yesterday, which was 39.1850. Okay, so geez, it looks like it wants to do it right now, right before the market opens. So yeah, that's the first thing that you're looking at. Once the market opens, does it come down and fill this gap? Does it get to 39.1850? If it does, what does it do once it gets there? Does that become support and then the market kind of finds a bottom and starts pushing its way higher, or does it push right through back into yesterday's range? As we've talked about a million times before on this channel, if we re-enter yesterday's range, it increases the odds that we go down and visit the opposite end. Doesn't mean we will, and I don't think we would, but it just increases the odds. So we don't want that to happen. If we pass down into yesterday's range, we want to find support pretty quickly and then turn around and head back above. Okay? If that happens, that's bullish. If it falls through, that's bearish. Okay? If the gap fails to fill, so let's say the market opens right here, comes down a tick or two, and then it just starts going higher, you want to go long with that trade because that is what's called a gap and go. And oftentimes when you get a gap and go, the market never comes back down to those levels again for the rest of the day. It just keeps pushing higher. So you got the gap higher. You got a poor high plus all these weak references above. So those things in combination basically set you up for a gap and go scenario. If the market doesn't pull back this morning, if it immediately pushes higher, that makes it very, very bullish to go take out this poor high. Okay? So that's basically what to watch. Let's just say in a worst case scenario, the market pulls back down into here, repairs. Ooh. Wow, I had the volume very loud on my computer. Today is also the monthly options expirations. Okay, so that's just something to keep in mind. Last month, when it was the monthly options expiry, I told everybody, hey, it's going to be a super boring condensed day. The market's just going to churn right around the same area. And then we had crazy volatility and the market moved to a whole new area. So I'm not going to come right out and say that again today. But I will say that Jim Dalton teaches that most of the time on options expiry Fridays, the market doesn't do a lot of volatility. It doesn't move very far. So it might just grind up and down within a certain range all day long. But like I said that last time, and then the exact opposite happened. So I'm cautious and ever aware that markets are random and anything can happen. Okay. Mediterra, good to see you. Good morning. If mine was spinning too, and I just clicked the refresh button and it worked, give that a try and let me know. Okay, so it looks like they're trying to fill the gap. Looks like they're trying to push the market down here to 39.1850. That would have been a good short from the open if you'd gotten into it. I certainly didn't have time because I was busy talking to you guys. But okay, so let's see what happens when we get that gap fill. Market internals opening bullish. Thank you guys for smashing that like button first thing in the morning. I love that you're getting used to the habit. I really appreciate it. All right, 34 contracts at the high here. That's not a good high, increasing the odds that it gets taken out. But I do expect a gap fill first. Jamie, what are we laughing at? Did I say something funny? Was I hilarious and I didn't even know it? Yeah, that's a good question, and I should probably not say things like that because it's a very like nuanced sort of point of view. And just for the record, um, Peter Resnicek often says that if you have like what we have here, where you have like thousands of contracts, and then you randomly have like 30 or whatever, that's often a sign that it's the low. That like he'll say like that could be the low for the day. I don't. I just find that that's not true. I find specifically, and this is only with the ES, right? I don't know with the MES. I don't know with the NASDAQ or anything else. But with the ES, you almost always need like at least 100 or more contracts for a high or a low to be good. But I can't. I can't really get any more complex than that. It's just something I've noticed over time. You want to have great taper. This would be good taper. For example, if this was like, you know, 2,000, 1,400, 400, 200, and then 100, that would be beautiful taper, and I'd call that a great high. But the fact that there's probably more than 34 people in the world that wanted to do business at this level. Also, it's one tick from the closing price from 2 days ago, which Jim Dalton would call weak, but I don't. Okay, so that's the gap fill. The gap is filled. Now we look for the market to find support. Could be POC from yesterday / overnight, somewhere around this area. Could have to go all the way down to half back. But getting below our closing price yesterday, that would mean we're going to have a continuation to the opposite end of yesterday's balance. So I don't think that's going to happen. I'd say we find support probably right about where we are, somewhere in here. If that happens, when the market pushes its way back above yesterday's high, that's a good long for a continuation higher. When you say could get near the value area high, I assume you mean yesterday's value area high. That is possible. But once again, like I said, if we go below yesterday's closing price, um, that seems way more bearish to me, to more of a continuation down. So, but you could be right. The POC from overnight's right at that same level. So, maybe it has to come down to there to find support. But I don't think so. I think by the time it gets below yesterday's closing price, the market has changed its attitude and it's bearish. And then we start looking at the opposite end of the range, or at the very least this weak pullback. But it does feel like it's finding support in here. It's just a very slow, grindy process. So we'll just wait it out. Again, don't love the 72 contracts on the low. I just went to Jim Dalton's website to look at the volume thing, and it looks like he's doing another webinar on February 23rd. I always suggest people sign up for those. It's free. He might say something worth hearing. So there you go. JimDaltonTrading.com. That's too early. I was just looking because this feels like low volume to me. It's just a random coincidence, but it is hilarious to me that we found our low literally 2 ticks from this halfback and 2 ticks from this halfback, like right in the middle. Because it could have been considered weak if it had been, 1 tick in either direction. But that's just a funny random thing. Pushing back up into yesterday's range, above yesterday's range, is bullish. That this was the support we were looking for. but it does have that sort of balancing grindy day feel to it. So I'm just keeping that in mind. Okay, so yeah, Dr. Vijay, you would be correct if, throughout the day today we work our way higher or we even just balance up above yesterday's high and then out of nowhere late in the day it sold off down towards the POC or whatever. 39.10 is what you're looking at. Okay, yeah, I mean, yeah, that would be the term for that would be liquidation, but I don't see that happening at all here. Um, the the sellers had their chance yesterday, right? The market was pushing back. The trend was lower. They had the trend in their favor. Um, you know, if they wanted to take this market lower, they had their chance yesterday. They missed their chance. Now it's a new ball game. We're above this previous balancing area, although you could argue actually we're still kind of inside of it. Um, Let me just try to draw a line around this real quick. So anyway, my point is they had a chance to sell off yesterday. So I think if we open this morning, we find support, we work our way back above yesterday's high. We had the gap fill. Now the market's moving higher. I think the sellers had their chance and they missed it. But again, I not to sound like a broken record here, but I don't know how far we're going to go today because I just have found in the past when it's an options expiry Friday, like the market will just bounce around in one area all freaking day long, and just drive you mad. So I'm just cognitive that could be happening here too. As far as targets to the upside, obviously these weak references and this poor high are the targets. But okay, let me just draw this real quick. Ugh, that line is terrible. Sorry. Jesus Christ. So this is why I'm not an artist. Yeah. So imagine that right there, the box that's like 5,000 lines. That's sort of our balancing area that we're stuck in right now. As soon as we break out of this, I see blue skies. But that's just me. We're friends in real life. Like we hung out, you would make that statement all the time. Just about how my brain works. And you're right, Dr. Vijay. We must be open to whatever the market tells us from its point of view. So if it decides it wants a late day sell off, it'll have itself a late day sell off. It do what it want to do. I just don't personally see anything that would indicate that right now. Yes, sir. There it is. So that's nothing to get scared about. It's nothing dramatic. And this slow, grindy nature, I hate to say it, guys, this is what you get during options expiry days. So if you're like hearing me keep talking about this and you're like, what the fuck is he talking about? Options expire. What does this matter? Why do we care? What you have to understand is nowadays, a humongous portion of the how would you describe it? Like the tension that's on the market, the thing that is either pushing or pulling it one direction or another. A lot of it is options, and it's options on underlying stocks, right? So it's people who buy options in, Apple, Amazon, Tesla, Google, companies like that, right? And so when you get the options expiry at the end of every month, those people are forced to rebalance their portfolios, right? Their options expire today. They're either going to take their profits or they're not, but they have to reposition themselves for the future. And so a lot of times what happens is, first off, we're talking about bigger money players. We're talking about hedge funds. We're talking about very, very large scale. Yeah, there you go, Andy. We're talking about very large scale, like institutional size investors. And so they don't ever really take their money out of the market. They don't like ever go to cash. They just move it from thing to thing. So as one set of options is expiring today, and they're either taking the profits or taking the losses or whatever from those trades, they're moving it into another trade. So it's like they're closing out their options on Apple and they're putting them into Amazon or Tesla or whatever. I don't know. And so you just get this thing where the larger market, like the S&P 500 or the NASDAQ or whatever, it kind of just goes nowhere all day. It just grinds up and down because the money's just moving back and forth. It's just getting repositioned. The tension is pulling it all over the place. So the market kind of just goes nowhere for a day. And it's pretty common. But like I said this last time, and then the market just went crazy all day long. So it doesn't mean it's definitely going to happen. But yeah, something worth thinking about. Okay, well, in terms of a bull case, you definitely don't want to keep drifting back into yesterday's range. On the S&P, I'd look at the low from the A period as sort of a worst case scenario. You don't want to get down there. And in the NASDAQ, I would say breaking this 20 moving average. Either one of those would kind of make me feel a little more bearish. Right now, I truly do feel neutral. All right, Algo Lover, let's take a look-see here at urinalysis. Urinalysis? That sounds like a medical term for urine. Urinalysis? 3865. Ooh, that seems steep, my brother. 3865. No way. I don't see that. Yeah, I would just say the same thing I said earlier today. They had their chance. If they were going to go repair this poor low, which is at 3869, 6875, if they were going to go repair that, yesterday was the day, or last night. This to me, just because it's so exactly at the bottom of the previous value area, or balance area, I'm sorry. Like, that's the support. That's the market saying, okay, we're done going down. Let's try going up for a while. And also, I just encourage everybody, I mentioned this yesterday, that I was only going to do the first hour of trade today because of the options expiry. It wouldn't be surprising to me if the market just grinds like this for the rest of the day and goes nowhere. So with that, I am going to leave you all here. News blip. I assume your ooh is to your analysis. Your analysis. Yeah. So for now, I'm long. I went long in the A period when we pushed below yesterday's high and then pushed back above it. And I've just been sitting in this trade all day. I've got my contract to close the trade here at the high at 39.30. And I'm just going to let it sit. I'm not too worried about a pullback here. It's possible. We do have this weak reference left over from yesterday that we could need to correct, but I just really don't see it in the cards. I see either a drift sideways for the rest of the day, maybe a small pullback, but not much, or just a drift higher. Any last minute questions, concerns, criticisms before I bounce up out of here and leave you all to trade all alone? Have a great weekend to you as well, my brother. Yeah, where is my stop? That's a good question. I have it at 39.10. Let's see why I put it there. Halfback. So if halfback isn't support from last night / the opening price, that's where I get out, is right there. Later, Gator. All right, guys. Everybody have a great weekend. I probably won't be here next week. I might be taking a week off next week, but I haven't decided yet. So you guys will just have to subscribe. You're going to have to push that subscribe button. Otherwise, you'll never know if I'm going to be here or not. It's a mystery. All right, everybody have a great weekend. Thank you all so much, and I hope you make lots and lots of money today. Happy trading.